Hello and welcome to the Harwood Report presented by Trade Academy. Today is November 27th, 2017. I hope everybody had a wonderful Thanksgiving. Let's get to the markets. First, disclosures: all services and content are provided for educational and information purposes only and are not intended as legal or financial advice. Please read through the rest of the disclosures. The key here is that none of this should be considered trade advice. These are the ways that I'm looking at the markets to start the week. And that's how I expect to approach it for myself. Doesn't mean I always will. It's just my starting thoughts for the week to get me ready to go. I'll go through the equities again: bonds, gold, oil. Pretty standard run through here for me. And we're going to get through this all as quickly as possible because, with last week's holiday week, not much changed in the week. A couple things of nuance, though, did change, I think, are of interest. Let's first start with fear and greed. It's up to 56 now, so the market's getting a little bit greedy, but really not crazy. Why? Because this has kind of been led by fewer names. You've had a lot of semiconductors, and now you've got small caps kind of coming up. This is a bounce off of this low level here. Until I see fear and greed really above 80, I don't really get too concerned that the market is over exuberant. It's still a hated market in this rally. But on that note, let's just do some charts. S&P's making new all-time highs again today. There's nothing bearish about this. The retests of the 20-day moving average tend to be buying opportunities. This was a little bit of a flag here, getting below the 20-day moving average, but we immediately bounced back above it. Everything is hunky-dory. Nobody wants to sell this market because you get burned when you sell the market. The MACD crossed back over here. There's probably a little bit of momentum higher here. For me, it's a grinding higher market, though. I'm not going to get explosive payout from buying outright calls. What'll get me more excited about the S&Ps for options trading on outrights is when I see a lower low and in reality a close below the prior day's low. Once I see that, I can look for some puts, because even on a move pullback here, it took 1 week to get from 258 to 256. There was a little bit of money to be made just on the volatility increases and things that happened in that break. A little bit of fear came into the market. These are the types of days that really get a lot of money, but we can see that those don't come traditionally right after making a new all-time high. You get a spike like that and a little bit of a pullback, a spike like that and a little bit of a pullback, but these big breaks happen on crosses of the 10 and 20-day moving average, not on the way to them. So I'm not too worried about a big break right now. That doesn't mean the market's going to explode higher. It's just, to me, a grinding higher market. Things I got to look out for that might cause a change would be the OPEC meeting tomorrow. I don't think it's going to have a huge impact on SPY, or Powell is doing his confirmation hearing in front of the Senate. Again, I don't see that necessarily being a driver of a massive liquidation move. But if I want to play on the short side, I've got a little bit of time. Until I get below the 10-day moving average, I don't have to be that aggressive. And the 10-day moving average is $2 away. It's just unlikely going to happen in a day. I guess $1.50 away. So for me, markets are still a sideways chop higher, and more sideways than chop higher right now, just because of how far above the moving averages we are. So it's a very, very slow grind. A move towards 261 might be all we can really count on for this week. That's not a huge move. Let's go over to Qs. As I've been talking about, this is still, it had been a huge runner. A little consolidation, big runner. I'm thinking consolidation again here, and maybe even a pullback in the Qs, because IWM has been playing some catch up, so there's been some rotation. You see a big rally there in IWM. This likely needs to have a little bit more consolidation, but it's still above all the previous highs there. It looks pretty good. It's just that it's really far away from these moving averages. So maybe these moving averages catch up a little bit. This stays sideways, and the Qs pull back a little bit, and SPY drifts a little bit higher. It's going to be to me, this looks like it's going to be a very, very slow, boring week. We're getting into holiday season. I don't want to get aggressive with outright options. And last but not least, the Dow Jones, which I've said looks a little bit like S&P Mini, has actually been a little bit of an underperformer to the S&P. So who knows? Maybe that gets a little bit of money flow to catch that up above some of the moving averages. Again, though, these are not big moves I'm looking for here, which means that there's nothing I want to be aggressive with in outright options. Where there's a little more interest might be in the rates, because of Powell's confirmation hearing this week, and the precious metals as a result. So we start with TLT here. We've had this nice, sort of ascending triangle. It kind of looks like a head and shoulders here, an inverted head and shoulders here, which would imply move higher. Today looked like it was going to get weak. We were trading below both Friday and Wednesday's lows. The low there was 126.31. We didn't break through that, and right now we're getting a bounce. Somebody's coming in and buying TLT right now. They're pushing rates lower. On a move above, what's that level there? 127.29. This has that potential to get a little bit more explosive. I want to wait because we're so close to it. I know it's 35 cents away, and that can matter when I'm getting in an entry here. But 35 cents gives me a lot more confidence that this is going to get another run. So how am I looking to play that? Well, in TLT, volatility is actually relatively cheap here. Realized movement has been pretty high. I got Powell's confirmation hearing tomorrow. I've got tax reform on the table. I've got all this other stuff. So I want to trigger my price move before I get in. But if we get that, I'm looking for some calls here. Traditionally, I don't want to get too much into the December 29th and January 5th stuff because that is cheaper because it's got Christmas and New Year's. But if I go all the way to January, 9% is very cheap. Call side, really looking at the 129s and 130s here, 9.25%. That volatility is very cheap for TLT. So I'll look at, say, the Jan 130s because into that rally, these will be closer to a 25 to 30 delta, and these will be 30 to 35. I'd like to get a little bit less delta because as volatility increases, those can give me a little more leverage. So into a rally, I'll look at the Jan 130 calls. And we just need to see that breakout happen to the upside here before I'm interested in doing anything. Otherwise, it's a chop market, and I'm paying theta for something that doesn't give me any value. So that's my TLT look right now. Is I'm looking for a move to the upside to get me excited. Without that move to the upside, I can't get excited. That will also have an impact on dollar yen. So generally speaking, as TLT is firm, dollar yen gets weak, and we can see the dollar yen is weak right now. As TLT is rallying right now, dollar yen is getting hit. Dollar yen is living into this chart looks terrible. We got through the 100 and 200 day moving average, chopped back to retest, and now broke again. This chart looks awful. As you guys know, this has been a driver of my bias in gold and silver. Gold has not had the explosive move that it probably could here. In reality, I'm thinking it should be at least above this level of 124, 123.97, whatever. That's a buck away. Silver, same kind of idea here. That could pick up 40 or 50 cents pretty quickly. Had an interesting potential move there on the, it looks like that was the 21st, or sorry, the 17th there, and then pulled back immediately. These things have been so choppy that it really has hurt to be long options outright. So what I'm thinking now is if I use a combination of the fact that dollar yen is weak and that breakout in TLT, that's when I can get a little more interest in gold. And I can look at it in the minors. Sorry, the junior minors are where I like it here for a reason you'll see soon. The volatility here is 25%. Traditionally, this implied volatility tends to be about 32%. There's been low realized volatility because this has been lagging. But I can buy that 24% volatility if this momentum picks up. I look at these December options, and I'm looking at these 34 calls for 21 cents. Let's look at where GDXJ is now on the chart. $34 is right here. When I was talking about gold, GLD back above 124, this was above 35. So there's a lot of potential room here. It's the miners have been lagging. I think they've got some explosive potential if gold gets firm. So if TLT firms, dollar yen continues weak, and gold starts to get a little bit of momentum, I'm looking at these miners, in particular the junior miners, because that's where the most leverage is. And with volatility as cheap as it is, I'm getting leverage to gold with cheap option leverage. However, let's look back at that chart. If dollar yen fails to break down here, reclaims this, and basically gets back above the 100 and 200 day moving average, we'll be retesting the 10-day moving average at that point. If that happens, gold is likely to get hit hard. What's going to be driving that? It's potential either Powell's confirmation hearing tomorrow or something changes with tax reform. So if we see that happen, I'm going to look to GLD for the put side. And the reason I'll look to GLD for the put side is because on this down move, GLD realized volatility has been more in line with this. So even though GDX volatility is low, minor vol is low, I don't expect that to pick up until we get a rally. In gold, realized volatility can be high into the break relative to where we're at right now. 9% volatility is low, but we're getting a little bit of a pickup in volatility here that's still playing in spite of more choppy action. And so for that, I will look into December 22nd, get right before that Christmas stuff happens, and I'll be looking for some 30 delta puts. So it would be the 121.5 puts at that point, 54-ish cents. When we look at the potential downside here, if dollar yen starts to firm, 120 is well within reason here. Retest down towards this 200-day moving average and potentially lower. I mean, if tax reform is that bullish for the market and that bullish for the dollar relative to the yen, there's that chance you could see a washout into the end of the year in gold. That's what would get me excited about it in gold. I need to see a firmness, a bounce in dollar yen, then I'm bearish in gold. Otherwise, if dollar yen continues to be weak and TLT continues firm, then I'll look for the bull side of the miners. I think we got some good leverage there. Let's go to the oil stuff. Little pullback here. I don't think this is a problem here. We're prepping for OPEC tomorrow, right? The OPEC meeting is coming up. They're going to make their decision on whether they're going to continue to throttle production, and they're going to. They're getting what they need out of controlling the market. The price is firming. It makes them better. It helps for the Saudi Aramco IPO, all this other stuff. So I don't expect to see any surprising thing where they're going to say, yeah, never mind, we're going to pump all we want again. That didn't work for them before. So I don't think they'll do it again. So in that case, while this is pulling back, it's pulling XLE and OIH back. It's just basically, sort of retesting this low here in XLE. In general, I think XLE is going to be a buy on dips if USO is a buy on dips. So how do I generate my signal? I wait for USO to stop falling. Maybe it'll stop at the 10-day moving average. Maybe it'll stop right here. And once that starts to bounce, then I'm looking at XLE. There's some calendar plays I'll talk about in the premium product. I'm not going to get into them right now. Volatility is too high to do a lot of outrights in XLE or OIH. OIH in particular, volatility is very high there. But there are calendar plays. Part of the reason that volatility is high there is this potential for a move from 24 to 26 in rapid order. So I think people are starting to recognize that volatility got too cheap in the oil complex. But for me to play these, it's more of a relative value trade. And again, I'll put those out in the premium stuff. So wrapping up again, very much not interested in the equity markets right now. We're just at a level that I just don't see a clear signal. Until we break below a 10 and 20-day moving average, I don't see a good momentum to the downside to generate a lot of return from being long puts. And to the upside, there's just not a lot right now when we're already this far above the moving averages. Probably more of a sector rotation game for me or an individual equity rotation game for me. TLT is where my first excitement gets. Looking at some calls if we break out above that 127, 21 level, I think is it was. And then that's also going to be, in line with what I'm looking at in gold. If TLT is firming, I expect that to be firm for gold and silver, because I think that if TLT is firming, dollar yen should continue to be weak. There's a tone of maybe a little bit of risk off, maybe a little bit of fear into selling the dollar, and that's going to get some excitement to gold. That's where I'm looking at the minor calls and the junior minor calls. And if TLT just pulls back and continues the range bound stuff, then that means that GLD was actually a sell into this rally, and into that I'm looking for the put side of GLD. So I think there's some potential there in the metals. And again, oil, it's probably a buy the dip market for me, but we got to wait and see when that dip is completed. So whether it's a retest of a key moving average or just stopping once the OPEC meeting is done. I mentioned the premium newsletter. I will outline more stuff in the newsletter that I'll put up on the site here in a couple of hours. I will actually talk through some ways to play this boring market in the macros, the SPY, IWM, Qs, as I put out every week. There is some stuff to play there in options that actually have some really good risk-reward profiles when the market is boring. Dull markets actually have really interesting setups for options that are still good. Again, the metal stuff I'll put in there as well, but I'll also talk about ways to play oil names because of the way that, the ETFs, because of the way that this volatility term structure is built and everything else. So there are opportunities there. They're just a little bit too complicated to get into on a quick video. So first month on this is free. I urge you to give it a shot. If you don't like it, cancel after a month. It costs you nothing. If you like it and you enjoy some of the commentary there, I'm always free to talk more about some of the ideas as well. So go to tradeacademy.co, /Harwood Report to sign up for that free trial. And I hope to see some of you there this afternoon. Contacting me, there's the website. Email is always the best way to get a hold of me, keith@tradeacademy.co. I'm available by phone at 312-600-8004, and feel free to follow me on Twitter. Thanks, everybody, and have a wonderful week after Thanksgiving.